Welcome back to another episode on the Coin King channel. I am your host, Down to Crypto TA, and today we're going to be taking a look at the Bitcoin monthly chart. So, I did some in depth analysis on the Bitcoin monthly chart and uncovered several intriguing patterns and correlations. That is what we're going to be outlining here. I also covered this with you guys on my X account, or at least I posted it there for you to be able to look at it and do your own research. So before we get started, do be sure to follow at DA Coin King and also follow me at Down to Crypto TA. And here's a look-see at that analysis that we're going to be covering today. So starting out here on the Bitcoin chart, I'm going to get into this indicator right here first. So what this essentially is, it is my own customized version of the CCI, and I have several signal lines adjusted to it to give me different readings. I've taken off most of those signal lines and I left this one particular one on here. And we're going to look at where we've had our crosses to the downside and our crosses to the upside on this signal line. So if we look here, I am assuming that we got a cross here. So this signal line isn't going to extend back very far. It is a very broad, long-term moving average. This is a monthly chart, and Bitcoin is still a baby in terms of its monthly chart. So if you're trying to put a long-term moving average on it, you're not going to get too far, which is why it's also very relevant because it is a long-term moving average. So with the assumption that we got a cross above this signal line right here, and we got this rally here to the upside here. And then you can see where we break below the signal line right here. So the jewel indicator breaks below the signal line here. And then we get a sell-off in the market. We get our sell-off right here. We drop back down to the lower boundary of our channel. And then we cross back up our signal line. And you can see how we start this beautiful rally right here into 2021. We cross back down our signal line. We do get another pump to the upside. This is a bull trap that happens right here. We don't deviate very high above our current peak. So for me, it really isn't as important, but it happened. Okay. So we got this move back up here, but we crossed below our signal line there and we got our move to the downside here. We crossed back up our signal line over here. You can see. And then we're here. And now suddenly we have crossed the signal line here. So we have peaked below the signal line on our monthly chart. Very important information there. And all of these other things are going to be confluence to it. So I did add trend lines. So you have regression trend lines on your indicator. So that's what you're going to, this is when you see those cyan colored dots going up, is trend lines. I'm not going to start from that one. I'm going to start from this one over here. So right here, we have our regression trend line. You have a deviation right here below it. But this right here doesn't really count. And I'll explain that later when we get to the moving averages. But this doesn't truly count. And so we break here with all the things coming into confluence. So we break the trend line here. We cross below the signal line here. Again, that's confirming our selling, our huge correction that takes place on our monthly chart. Another trend line here. This is the start of our trend line from our very low at the bottom end of our channel. And then you can see where we get our first touch point that connects it. And that is this low right here. That's our connection point there. And so come up. Again, as I said, we break the signal line, but we do not break the trend line, which is very important. We didn't break the trend line, and it is truly a connecting trend line. It shows us that we get support right here. So we get support off of this low right here. Support there. But then once we break that trend line, that is where you truly see the correction taking place. Bullish divergence right here. Bullish divergence showing right here, crossed above the signal line, and we broke the trend line and the signal line now. So that's two confirmations we have on this monthly chart. If we have truly broken down. Now I'm trying not to be too rash because we're still in the beginning of the month of July. Anything can happen, but that's very confirming right there for me that maybe there's some information that we don't have as a retail investor and insiders have it, and major sell-off is coming. So then we look at where price may potentially go to, and that is where I start drawing my fibs. So we take a look at the Fibonacci levels. And something you're going to see that is consistent is you're going to see that we consistently come into the 786 and the 0.886 pocket. So price is going to drop somewhere down between this. And it doesn't just happen one time. That is why it's so important. It is consistent. It happened every time we got the correction on the monthly chart. Every time we got the correction on the monthly chart, we dropped into the pocket of the 0.786 and the 0.886. This is once right here. Again, from our peak to our low, we drop into the pocket, 786 and 0.886. Again, we have our peak and we have our low of our channel. We drop down into the 0.786 and the 0.886 pocket. So we come over here. We have our peak, and we don't actually break down to the lower end of our channel, but we do touch the top point right here. But the point that's being made here is that we come into the 786 and the 0.886. You're going to have to identify this one, guys, from this wick over here. So this wicks down. Very sporadic move happens right here. That's news driven, and we're going to get into that too. So you have this drop down into the 786 in the 0.886 pocket. And we move right along. Let me push that a little bit further here. And you see it again. From that top down in here, we come into the 786 and the 0.886 pocket. So that just continues to happen over and over and over again. So we're here. We have a break of our trend line. We have a cross of our signal line. We have the potential of coming back into our pocket of the 786 and the 0.886, and that's going to be around $27,000, guys, if history repeats itself. It hasn't proven wrong yet, but if history repeats itself, then you have a blueprint for where price action could potentially go to. So another factor that's going to be moving averages. So we get into our moving averages. You have your peak. You have your cross. You don't actually break the trend line here. This is actually the starting point of this trend line right here. So you just have to go with the cross here as we're developing more details. So let's just come here. We have our break of our trend line. We have our back test of our trend line right there. So that's this peak right here. We back test. We don't manage to break above it. But of course, following behind this break of the trend line here, we get a cross of our 10 and our 20 moving average. That's additional confirmation. It happens with the lows too. So it works for the lows the same way it works for the highs. You get a cross of your 10 and 20. It comes earlier when you're getting the pump up. You're going to get the cross of your 10 and 20 first, and then cross of your signal line, versus if you're getting a breakdown, you're going to get a cross of your signal line and your trend line, and then you're going to get that cross of your 10 and 20 happens after the fact. So here, your cross of your 10 and your 20, a cross of your signal line, and a pump to the upside. And again, right here, break, trend line, break, signal line, cross of your 10 and 20. Again, over here, break, signal line. You don't actually break your trend line just yet. You did get a cross of your 10 and your 20. And so here you have your bull trap, and then you have your moving averages are not orderly. If you understand that, your moving averages are not orderly. So your moving averages would be in order, with your 10 being at the top and your 20 being below when you're getting a rise, right? So you will look for that cross, and you will look for the 10 to be at the top and the 20 to be at the bottom. You don't get that. You get a pump into your 20 and you reject, and you have your bearish divergence right there as well. And down here at the bottom, you get a cross of your 10 and your 20, you get a cross of your signal line, and we're up there. So we're very close here. We got some smoke. We're very close right here. Now, if you're looking here, you can see that we were very close right here too. The only difference with us being close here, where they merged together ever so tightly, was that you were nowhere near your signal line. You just tapped into your trend line. That's it. You tapped into your trend line. One touch, two touch for your bullish divergence right here. Sorry. So one touch, two touch for your bullish divergence here. And then you get a third touch into this trend line right here. And now you've broken that trend line. You crossed that signal line. And then you have a convergence of your 10 and your 20 right here. No cross just yet, but that would be our next confirmation signal if we see a cross here, which is why, again, I am waiting for this monthly close to take place, because I want to be sure that we don't deviate back above it. So we could deviate back above it. We could get another test to the upside, and then that would we would end up having to move our Fibonacci levels to measure where our next peak may be at and where price could potentially come to. But for now, like I said, this $27,000 range, you have double bottoms right here. And then where you have double bottoms and double tops, you have liquidity. So we'll be on the lookout for that. There's also divergence, which is a factor. So we can see we have divergence right here. We have our 2021 peak on that indicator here to our 2024 peak on that indicator right here. We have bearish divergence. So we can couple all of this together. We can couple the bearish divergence. We can couple the break of the trend line, the break of the signal line, across of the 10 and 20 potentially happening, and coming down here into the pocket. Now that would be similar to what we did over here, where we had this peak over here in 2023. And this peak over here in 2017, where we got the bearish divergence. So we had the bearish divergence, and we don't just go off of the bearish divergence alone. We wait for the other signals to confirm, because divergence may not always play out, right? But we got a break of our trend line. We got a break of our signal line. We got a breakdown in price action. We ended up getting our cross of our 10 and our 20. That is the relevancy here. So I just wanted to give you guys a blueprint of what could potentially happen in terms of the monthly chart. Now, I did share something over here on my X account back on March 6th. Back on March 6th, I posted. On March 5th, I received a bearish alert from the monthly time frame of BTC. And I said, while it hasn't fully confirmed, such signals are significant, especially from a high time frame. So you never want to ignore something that builds up over months, years, 1 year, 2 years, to get a signal from a high time frame such as the monthly chart. I don't care how many pumps we get on our 1 hour chart, our 4 hour chart, our 12-hour chart, our daily chart, or even our weekly chart when it comes to our monthly chart. It takes a lot more to start seeing these bearish signals than it does for your daily chart and down. It takes a lot more to start seeing these signals, guys. So this is very, very important information. And we have consistency to go off of. We have historical data to go off of. The statistics showing us that price could potentially come back down into this pocket of this 786 if this is our peak, with our bearish divergence, with our cross of the trend line, with our cross of the signal line, with this pending cross of this 10 and this 20. Don't ignore it. I'm not telling you to go sell your Bitcoin or anything of that nature. But what I'm telling you is to just be aware. There could be some things happening in the background, guys, that we are completely unaware of. We don't always get the news up front. In fact, there's also news correlated with these valleys and these peaks. Okay, so bullish divergence was another thing right here, but I'm not going to get into that right now. So when we take a look at our history here, when we got this peak right here, it was accommodated with news. It actually happened to be where we got the hack of the Mount Gox right there. So it was accompanied by news. All of our peaks were accompanied by news. We got this peak right here. It was the Mount Gox once again. Mount Gox once again. So panic selling happening, disruption, high traffic, another Mount Gox sell-off, and then we had increasing scrutiny and regulatory warnings about Bitcoin from various governments that also contributed to that sell-off. We have this peak right here. News was China. The People's Bank of China announced that financial institutions should not use Bitcoin. That led to a sharp price decrease. And not just that, we also had a rapid increase. If you see this huge candle right here, this big inefficiency in price action, that was another thing that led to the sell-off. Sort of like what we're seeing right now. And then we continue. We're here at our December 2017 peak. We had the launch of the futures CME that brought in selling pressure. People coming in to short the market. This peak right in here. We also had increased regulatory scrutiny there, crackdown on exchanges that led to the drop off, and just an environmental bubble that eventually burst, and investors started taking profit. This peak over here, 2021, regulatory crackdowns, Turkey banning the use of cryptocurrencies for payment, a prolonged bull run. We had a prolonged bull run. The market was just due for a correction. We corrected slightly. Again, our bull trap happened right here. And as we came up and just, grabbed the liquidity from this peak over here, we had, more concerns about the Federal Reserve. Yeah. So we had concerns about the Federal Reserve tapering its bond buying program, which could lead to reduced liquidity in the market. So we had that there, and then we had continued pressure from China and their restrictions of mining and trading of Bitcoin, and just just the euphoric rise right here that led to the sell-off. So that's what happened right there at that point there. And you couple everything together, bearish divergence, break of the trend line, break of the signal line, pending cross of your 10 and 20, and then the current scrutiny that we have in the market, and the sell-off. We have the concerns of Germany selling, which, I continue to see the post saying they're almost done. That's fine. You have the Mt. Gox repayments. Those concerns are there. We continue to get scrutiny from the SEC. We have a looming presidential election. There's a lot happening with in our economy. We still have the inflation concerns. We still have the interest rate hikes by the central banks, and a lot of uncertainty. And you have people looking to de-risk and people taking profit. So, news and technicals, a lovely combination. Lovely combination. So that's what I have for you guys there on this monthly time frame, and whether or not we're going to see a major sell-off is possible. And if it's based on history, it's going to continue to be consistent, as it hasn't broken this pattern yet. It has not broken this pattern since the beginning. That's very important. Since the beginning. I know we have other things to consider, and they can all turn the market around, and maybe we'll see something different the same way we saw when we got the pump to the upside. That will remain to be seen. But at least you're aware. You have something to look back to. And that's what I want to share. So, once again, be sure to follow me at Down to Crypto TA. You see my ugly mug right there. Be sure to follow me at Down to Crypto TA. And again, be sure to follow at the Coin King, Crypto Ken. Hit the like button, guys. Hit the like button. Just a small token of your appreciation is what I'm asking. I'm trying to be committed to making these videos, to providing you guys with relevant information, and not just psyching you out to tell you that we're going to $1 million like you get from a lot of these YouTube influencers. And nobody wants to face the reality of corrections happening in the market. Nobody wants to deal with that. Nobody wants to tell you that. They tell you that later, once all of the sentiment changes. I try to get ahead of it. And I try to give you guys the information in advance so you have an advantage of what could potentially happen in the market. So hit the like button, show your support in that way. Subscribe, follow me, help us get the subscriber count up on the channel if you want to continue to get good information. I'm not just a bear. I'm bullish when it's time to be bullish. I am bearish when it's time to be bearish. I want to always recognize, what could potentially happen, because that's what technical analysis is about. It's about the, probabilities, increasing the probabilities of things that can happen. And people don't tend to use it the proper way a lot of times. And that's what I'm here to do. Provide you with proper technical analysis. I won't always get it right, but I am basing it on the probabilities. With that said, I will see you guys the next time. Peace.